Hey everyone, welcome back to Corporate Decoder. Today, G.L.B.S just filed its Q2 2026 earnings report, and I am seeing a significant turnaround that deserves a closer look. Quick note, this is not financial advice, just my take on public filings for educational purposes. Globus Maritime is showing a much stronger financial performance this quarter, and the key numbers reveal why. Let's dive into the numbers for the first half of 2026 compared to the same period in 2025. This report is essentially a look at how the company is doing financially. First, let's look at the income statement. It shows how much money the company made and spent. For the 6 months ended the 30th of June 2026, Globus Maritime reported a total comprehensive income of about $5.1 million. This is a big jump from the same period in 2025 when they had a total comprehensive loss of around $3.35 million. So they went from losing money to making money. A big reason for this turnaround is the increase in Voyage revenues. In the first half of 2026, Voyage revenues were about $26.9 million, up from $18.2 million in the first half of 2025. That is a nearly 48% increase. The report says this jump is mainly because their daily time charter equivalent, or TCE rate, went up significantly. The TCE rate is a key measure in the shipping industry that shows how much money a vessel earns per Dalton Y after accounting for voyage expenses. In the first half of 2026, this rate was about $17,691. Per Dalton Y, a big leap from about $10,366. Per Dalton Y in the same period of 2025. That is a 71% increase in daily earnings. Think of it like their ships are now earning much more for each day they are out at sea. Another interesting item here is the gain on sale of bunkers, which were about $1.7 million in the first half of 2026 compared to nothing in the prior year. Bunkers are essentially fuel for the ships. This gain seems to come from buying fuel at one price and selling it at a higher price, likely due to rising fuel costs during the period. Now, let's look at expenses. Vessel operating expenses, which include things like crew costs, insurance, and repairs, were about $8.9 million in the first half of 2026. This is slightly down from $9.3 million in the same period of 2025. The company operated fewer ships on average in 2026, which likely helped keep these costs a bit lower. The daily operating expense per Volt Essel remained pretty much flat at around $5,466 per Dalton Y in 2026 compared to $5,464 in 2025. So while they had fewer ships, the cost to run each ship stayed pretty stable. Administrative expenses, which include things like executive salaries and public company costs, went up. They were about $3.9 million in the first half of 2026 compared to $2.5 million in 2025. The report mentions this increase is largely due to a one-time bonus of $2 million awarded to a consulting company affiliated with their chief executive officer. This kind of expense can skew short-term results, but the core operations seem to be doing better. Interest expense and finance costs were about $3.5 million in the first half of 2026, down from $4.2 million in the same period of 2025. This decrease in interest costs is good news, and it seems to be because the company's outstanding debt has gone down, and also the average interest rate on their loans has decreased. This is a positive sign for their financial health. Now let's switch gears and look at the company's financial position as of the 30th of June 2026, which is shown in their balance sheet data. The value of their vessels, which are their main assets, stood at about $227.8 million. This is down from about $233.2 million at the end of 2025. This decrease is likely due to depreciation, which is the accounting way of showing that assets lose value over time. Their cash position looks healthy. As of the 30th of June 2026, they had about $29.3 million in cash and cash equivalents. This is up from $26.3 million at the end of 2025. Having more cash is always a good thing, as it gives the company flexibility. Total equity, which is what is left over after subtracting liabilities from assets, increased to about $181.1 million from $176 million at the end of 2025. This growth in equity is driven by the income they generated in the first half of 2026. Their total debt and financial liabilities are listed at about $105.4 million, down from about $109.2 million at the end of 2025. This reduction in debt further supports the idea that the company is managing its finances more effectively and paying down its obligations. Finally, let's look at their cash flow statement, which shows how cash moved in and out of the company. This is a crucial part. Net cash generated from operating activities was about $10.3 million for the first half of 2026. This is a huge jump from just $1.2 million in the same period of 2025. This strong positive cash flow from operations reflects their improved profitability. Cash used in financing activities was about $7.3 million in the first half of 2026, which is a bit less than the $8.9 million used in the same period of 2025. This decrease in cash used for financing is likely due to lower debt repayments and interest payments, aligning with the overall reduction in debt. Looking at the operational metrics, the daily time charter equivalent, or TCE rate, really stands out. As mentioned, it jumped from about $10,366 per Dalton Y in the first half of 2025 to $17,691 per Dalton Y in the first half of 2026. That is a massive increase and indicates much better charter rates for their vessels. Their daily operating expenses per Volt Essel remained very stable, around $5,464 per Dalton Y in 2025 and $5,466 in 2026. This stability in operating costs, combined with the surge in TCE rates, is a recipe for increased profitability. A forward-looking item is their commitment for shipbuilding contracts. They have agreements for 2 new fuel-efficient bulk carriers costing about $75.5 million in total. These are scheduled for delivery in the second half of 2026. They have already made significant installment payments, and the remaining amount is significant. This shows they are investing in expanding and modernizing their fleet for the future. The company also reports on the fair value of its financial instruments. For their long-term borrowings and financial liabilities, the fair value at the 30th of June 2026 was around $56.2 million for borrowings and $51.8 million for other financial liabilities. This is compared to slightly higher figures at the end of 2025. This means the market's perceived value of their debt is slightly lower than its book value, which can be a sign of improved financial stability. So, looking at all of this, Globus Maritime appears to have significantly improved its financial performance in the first half of 2026. The core of this improvement seems to be much higher charter rates for their vessels, combined with stable operating costs and a reduction in debt. The company is also investing in new ships, which suggests confidence in future market conditions. The big jump in TCE rates is the most striking positive, showing they are earning substantially more from their fleet. The increase in administrative expenses due to a bonus is a bit of a distraction, but doesn't detract from the operational improvements. The risk I am watching is the volatility in the shipping market itself. While rates are high now, they can fluctuate significantly. However, the company's investment in new vessels suggests they believe the positive trends will continue. My biggest concern is the ongoing geopolitical instability mentioned in the report, which could disrupt shipping routes and add costs, though management currently believes its impact is limited. What I'm actually looking for is how they manage these new vessels, and if they can secure strong charters for them, maintaining the high TCE rates. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.